Hello traders and welcome to Magic Indicator Strategies. The trading strategy we're about to teach you in this video has accuracy of over 80% across all markets. It works extremely well on smaller time frames such as 5 minutes, 15 minutes, and 30 minutes. This makes it suitable for day traders and scalpers. It consists of 3 free TradingView indicators that are available for everyone. Traders, before we start, please like this video for the YouTube algorithm. Also, subscribe to Magic Indicator Strategies if you want to see more special content in the future. Without further ado, let's get to the strategy. First, log into TradingView and open the chart of any asset. The very first indicator we will need for this strategy is called Stochastic RSI. You can install it on the chart by clicking the Indicators menu at the top and searching for Stochastic RSI. You will find it under the Technicals section. Before we start using it, we need to tweak its settings. First, change the K and D lengths to 5. Then head over to Style and make some minor adjustments here. Once you've finished with the settings, the indicator should look like this. The Stochastic RSI is an indicator that applies the formula of the stochastic oscillator to a set of relative strength index RSI values rather than a set of stock prices. Both the stochastic oscillator and the RSI are considered momentum indicators. They're used in the technical analysis of a stock. The stochastic oscillator utilizes a stock's price movements in relation to defined support and resistance levels, while RSI calculates momentum based on the comparison of closing prices over a period of time. The two technical indicators were combined to increase the sensitivity to price fluctuations and provide a more thorough indication of upward or downward price momentum. Due to its increased sensitivity to market fluctuations, the stock RSI can be useful for traders looking to gauge a stock's relative momentum. It's a particularly useful tool in low volatility stocks, as price movements tend to be more pronounced. Stocks and other assets, such as crypto, that exhibit high levels of volatility can produce multiple false signals, as the RSI moves within a hard-to-find range over relatively short periods of time. Our strategy will heavily rely on the Stochastic RSI as a confirmation indicator. For the next indicator, let's add a trend filter. We have found a very effective tool for this purpose. It's called Ripster EMA Clouds. This indicator was created by Ripster47. We will also need to adjust its settings. Pay close attention to what we're changing. This is very critical. This indicator will help us read the trend in the market as well as identify the ideal places to buy and sell the security. The EMA cloud you see on the chart will determine the long-term trend direction. If the price breaks above the EMA cloud, the indicator will change its color to blue. This also signals a change in the trend from bearish to bullish. During the uptrend, only long positions can be taken. When the price breaks below the moving average cloud, the indicator turns orange. Make sure to only take short positions during this time. Finally, to complete the strategy, we will need to add one more indicator to the chart. So go back to the Indicators menu one more time and search for an engulfing candle. Select this script created by our Munoz. So how exactly should you enter buy and sell trades? Well, let's break down the conditions for a long trade. First, the price must break above the EMA cloud. The cloud must be blue. This is definitive confirmation of an uptrend. Second, after a sharp move to the upside, the price must retest the EMA cloud. However, it should not break below the cloud. Third, the Stochastic RSI must get oversold during the pullback. Fourth, For final confirmation, wait for the stochastic blue line to cross the orange line to the upside. At the time the cross happens, the price must be closed above the cloud and an engulfing bullish candle must be present. Skip the trade if the price is closed inside the cloud. If the conditions are in place, enter a long position at the close of the trigger candle. The stop loss should be set below the recent swing low. Target at least 2 times the risk in this strategy. Here are a couple more examples of a buy trade. Watch how the price respects the EMA cloud. If you follow the rules we just showed you, you will be amazed at how accurate this strategy can be. By the way, traders, if you're enjoying the content, please leave a like to this video and subscribe to our channel. Okay, now let's understand the rules for short positions. First, wait for the price to fall below the EMA cloud. The cloud will change its color to orange. Once the downtrend has been confirmed, wait for the market to retest the cloud. Keep in mind that the price should not close above the EMA cloud. At the time the retracement occurs, the stochastic RSI must become overbought. Then wait for the stochastic orange band to cross the blue band to the upside. As a cross occurs, the price bar must close below the EMA cloud and a bearish engulfing candle must be formed in the market. Once these conditions are met, place a sell order at the close of the price bar. Your stop loss should be set above the recent swing high. Target at least 2 times the risk. Now let's test this strategy on the price of Ethereum in the 5-minute time frame. Make sure you pay close attention to these trades. Watch how this strategy eliminates the ranging market from our trading. Also pay attention to the thickness of the EMA cloud at the time the pullback occurs. The thicker the cloud, the better. A thick cloud indicates a strength in a trend. When the trend is weakening, the cloud becomes thinner. Almost every single trade that we found turned out to be a winner. You can expect 2 to 3 trade signals per day with this strategy on one currency pair. Thanks for watching this video and see you in the next one.